traders, it's Mike Bell here from the Armchair Trading Floor, just coming at you with this week's watch list. We're going to go over a few pairs this week and also obviously send out trade alerts and some running commentary on these pairs as the week goes by. So what we'll be looking for is we'll be looking at about 5 different pairs. It is Sunday evening on the 13th of May 2018, so let's start this week's watch list. So we're going to be going over GBP USD, the forecast. We're looking at the weekly chart on this one. We'll be going over the Swiss franc Japanese yen, the Aussie Japanese yen, the New Zealand Canadian dollar, and then we'll touch into some cryptocurrency as well. But to start off with, just to give you an overlook on the Great British Pound, so GBP USD. We've been channeling on GBP USD for literally about a year and a half now. For you guys that have been members for a long time, you will have known that we've literally been on GBP USD for some time now, and we've literally got this pair to the T. We know the key levels that are obviously highlighted here on with our horizontal rays, and also you can clearly see that price is just on this channel, creating higher highs, higher lows, signaling that we're obviously on uptrend. So high high, high low, high high, high low, high high, and then we actually formed a double top up here, so we're heading back down to support now. What I foresee is going to happen on GBP USD, and again this is a long-term outlook here, is the moving averages after forming this double top formation up here and now pointing to the downside after a failed break, so we will be seeing some retracement. However, we're currently going to be sat in between 1.35 and 1.3850. This is going to be our zone that we definitely will be sort of staying within in the next sort of 2 to 3 months, and before either breaking above to hit our eventual target of 1.50 or break to the downside and then pull back higher. So if I zoom in on this chart right here, what I can actually foresee is I can see potentially we're going to be coming back down, and we're currently sat at 1.33540. If you have a look to the left hand side here, we could open up to potentially fake traders out to create a head and shoulders pattern right here. If price comes further down, pulls back up, and again you can see there's a potential head and shoulders being lined up right here, and I'll just highlight this on this particular chart. So you've got your left shoulder, then you've got your head, obviously where we've had the double top, and then again we could see a right shoulder being formed somewhere around here. And again, I think this is going to be the move that most traders are going to be looking at. So 1.3450 is a very key level when it comes to GBP USD. Again, if you are an old member of the Armchair Trading Floor, you know that because you've got a key level set up. If you're a new member, definitely 1.3450 is a very, very strong level for GBP USD. So that's what I foresee. And the reason why, what we're looking for, if I zoom this into the daily time frame, what we've actually got here is, again, I've drawn on the trend line from literally the back end, well, the start of 2017, when we're actually, October 2016 after Brexit. Now, what I'm going to do, you can see here that we're respecting this trend line right there. We've still not yet broken below that trend line, literally pinpoint accuracy to the extended wicks right there. What I do think is going to happen is I think that we are going to see prices move sideways up until the point where we get close to this trend line. I do expect some sort of a reaction to obviously go long, take us back up to around about this zone, and then that's where we're going to see some price action of either a reversal sign or to take us back to the trend line, and then it's literally going to be a make or break scenario for GBP USD, because I do foresee this head and shoulders pattern being formed to try and fake out a lot of traders to think that we're going to head all the way back down to 1.20. Obviously Brexit is on the news, it will definitely be around that sort of time that we do see this scenario. You'll be seeing it heavily in the UK on the news stations talking about Brexit. But for now, the moving averages are pointing to the downside on the daily, which signals that there is a strong bearish momentum being formed. If I take a look here, normally obviously after a strong move to the downside, we will see some form of a pullback, which is why I've got this 1.3850 level highlighted up here. If I take the Fibonacci tool on these levels, let's see where we are heading. So for a potential ABCD pattern, there we go. So if I take a look here, what we could potentially have for a scenario is an A, B, C, D formation, which will take us down to 1.3220. However, if we break that 1.3220 level, that would literally signal a massive sell-off, because that would complete the head and shoulders pattern. However, I don't think we're going to get all the way down to here. We should potentially see 1.3450, or at the very least 1.3375, around this sort of zone right here. But if I draw this on our chart, we can see here, using our fib, you go from obviously your swing high to your low point, so that's your B. Now we're waiting to find out where our retracement level is actually going to be up here eventually, and then to create this new higher high before taking us higher. I'm still very bullish on the British pound versus the US dollar, and we're literally looking for our C, which I think is going to eventually bounce off the 38.2 fib, which will signal a strong sell-off down to our extension target of around about 1.3220. I don't think we're going to get all the way down here to the 1.322 level, but I will take you on the members up just so you can obviously see exactly what our analysis is and why we're obviously using the fib tool for this particular trade. So I'm just going to open up the fib tool again. For you members, you will have obviously seen these pages before. Go on our website, open up the PDFs. We can see here, depending on where we're going to bounce off, what level we've got here, that we're actually looking at. If we bounce off the 38.2 fib, this is this pink line, we should be seeing the minus 27 fib level over there, and then potentially an extension target, but I don't think we're going to get to that for GBP USD. So what I'm going to be looking at is I'm going to be looking at two scenarios on this week's open. We'll either be looking to wait to go long on GBP USD with our stop loss just shy, so 1.3350, so about 100 pip short, and then we are literally going to be going to that 1.3850 level. So solid 1 to 2.5 risk reward, and then again, if you're still in this position, you can hedge a trade to the downside, but we need to wait to see if there is a strong rejection at this 1.3850. If we get a strong rejection at 1.3850, then we will be looking at further shorts down here. But again, this move is going to be over a long term, but there's definitely an immense amount of pips to catch for the short term, while we obviously go through the next few weeks on GBP USD. As I move into the next pair, we've got Aussie Japanese yen. So for you guys, you know that we killed Aussie a few weeks ago as well. Very similar move to GBP USD on our 61.8 fib. What I've got is I've got a push up on the hourly chart. We've obviously we've had a bit obviously caught our swing low right here. Price trajectory, we've actually sat above these moving averages. Now I've drawn on a trend line from our daily time frame, which has actually extended us out to this level. Now we're going to be in between our 61.8 region and our 78.8 Fibonacci region right there. So I'm favouring a short position on this. If you can catch this C leg, this is going to be a nice shot to take all the way down to our target. I do think that we're going to break support as well. Support's currently sat at 81.935 for our weekly support right there. And what I'm looking at is a simple ABC D move as well. A 50 pip risk for a 273 pip reward for Aussie Japanese yen, with our entries at 83.122. So yeah, if I zoom this in on the hourly time frame, you can actually see what we expect. So we've got a trend line going up. We've actually broken below this trend line. I expect some form of a retest, and you can see here, if you look to the left hand side, we've got this zone that price is literally just being sat at. So I do assume that this is going to be a strong level of minor resistance right there. So I do expect some form of a rejection on that level. Then again, prices spike back up to the level after obviously bouncing off with a weekly support at this 82 region. And again, we're going to be back up here. Could see a manipulative spike up before rejecting on this daily trend line. So this is the move for Aussie Japanese yen. And I'll just zoom that out. Don't worry, I will be sharing these print screens in the full member zone as well, so you guys can obviously copy these charts on your trading view and then obviously check on the member zone, so then you can obviously copy them as well for your own analysis. So we will be definitely be jumping in on this short. I will be actually looking to set a pending order, but pending sell order on this trade, but I need to see how the start of the week reacts to see if we can get this pullback to weekly support before obviously triggering or entering our sell position on that pair. Same again goes for the Swiss franc to Japanese yen. Again, I'm favouring shorts versus the Japanese yen. The Japanese yen is obviously coming up very strong, so what I do foresee is, again, on a 38.2% fib bounce on this level. We are on a downtrend as well for the Swiss franc Japanese yen. You can see here, very smooth downtrend. If I actually get the trend line, this has literally been respecting this trend line all the way down. Got a period of being oversold right there. I'd probably say that's about right. Zooming out to this level, what we've got is we've got our main trend line. We've got a counter trend bringing us back up to this trend line, which has been heavily respected. And then what I foresee is we're going to have a descending triangle right there. So we could be seeing some form of consolidation. Price is obviously taking us up back to this trend line before exhausting further to the downside. Just to make that very clear. And again, similarly, we're targeting our minus 27 fib extension target. So 1 in 3.5 risk reward, very solid risk reward here on this particular trade. You'd be looking at entries around this 38.2 fib level. And again, if we catch an entry at the 38.2 fib, you know that the rule of thumb is it is going to be an aggressive move as well, because the 38.2 fib bounces extremely fast and aggressive as well if you obviously have a look at the member zone. So that's what we're looking for that pair. Also, moving on to the cryptocurrencies. So where we are with Bitcoin, Ethereum, Ripple, they're all still following this same move. So what we've got is we had a strong few weeks actually. Strong few 5 weeks. Obviously you guys are with me. You saw the video, and for you members that have been with us for a while, you've seen how we took entries and we took buys around this little region right here. Let me just get there. This region right there, around about 6,500. Again, I know a lot of you made some decent money, and when you bought that, I hope you kept on to a few of your positions as we advised as well. We are seeing a little pullback right now, but what we've actually got here is I'm actually on the weekly chart. With cryptocurrency, what you got to do is, because the market's so infant, there is algorithmic trading patterns that run, but they run on the minute time frame, 5 minute time frame, hourly time frame, 4 hour chart, daily chart, weekly, then the monthly. So you've got to take in the high time frames to understand where the next move is going to take you. So what we've got here is we've got this trend line that we've obviously mentioned a long time ago. This trend line's been running since about August 2017. So we obviously respected and bounced off that trend line again. I do foresee that we obviously haven't broke above our moving averages. We are still bearish. We've got a counter trend line here that we've managed to finally break. We could be seeing a break, a retest, take us back down to this trend line, or even back down to about this level, our original entry points, and we can load up on further positions before going long. What we do need to look for is, because Bitcoin is the leader of the pack, we've got this 10,000 region that we failed to actually spike. We failed to break and close above, which is why we've seen the sell-off in the last 3 or 4 days. You can see on the chart, if I zoom this in, extremely bullish. So even though we've been on a strong downtrend over the last 5 or 6 months, we are extremely bullish for where, if you look at the prices over the last 2-3 years, we are going up, up, up. We are creating a new leg to go further, to go higher here actually, and when we explode, we will literally explode. Just so you're aware, we obviously got minor resistance at 10,000. Once we break 13,500, we will see price go into the stratosphere, but that might be literally 1 year away, a year and a half away. But it's very key that we get entries in right now. Make sure the entries are solid enough to obviously sustain and manage. You can manage your account by obviously having that movement within the entries, because these cryptos are extremely volatile. They move very liquid, and obviously price can explode, but when they explode, they explode. Again, you guys that were with us for a long time, you will have seen this move, and we caught entries literally right at the bottom down here. So what I foresee is going to happen is, if I move this into, so for the weekly time frame, we obviously bought here, we've got a zone of minor resistance as mentioned, so we could see price pull back to about halfway in between our entry point and our resistance level that we've got. So we could be seeing potential buy entries around about in probably around about the next week, the next 2 weeks, where we can potentially create a new higher high and start a new ascending channel. If we start a new ascending channel, this is going to be literally very, very easy for us to just scrape off the bottom, because we literally have this new trend line to respect, just as we did back in September to December, where we literally just waiting for the price to come down to this trend line, touch a trend line, break, and then eventually we will explode. So I foresee this move that happened between September 2017 up to about the second week in November is actually being replicated right now, and I can foresee this happening around about there. So this same move is playing out right now. So all we need to look for is the bottom off this trend line and identify where that takes us, so then we can obviously take entries at the trend. For me, this trend line potentially looks something, I'm hoping it's going to be something like this. I'll just zoom out on some of this noise, so then the charts are quite clean for everybody to see. I'll take this in on a daily time frame, and that should erase some of the rubbish that's on the screen right there. So again, double top formation. We crashed all the way back down to support. Support held up at 6,500. Kept us there. So what we are looking for is price to come to this trend line and then give us a new higher high. So if we take a look at the chart, we've got our original low point. We've created a high, so we've got a target to aim for. We've got a resistance level that we need to obviously aim for right there. So all we need to wait for is a new high low to be formed. Again, I've mapped out this zone right here because we're going to have a trend line. So you look where the wicks are. We've extended from the wick. We could crash further down to about 8,000 again. But if I use my Fibonacci retracement tool to highlight the technical levels, we've got a potential ABCD pattern on the ABCD pattern forming, where we've actually got A at our low, B at our high point, and all we're waiting for is our C leg. Now, the 50% fib has been respected. Price obviously came down, bounced off the 50% fib, and then we're obviously aiming higher. However, until we break above the 23.60 fib range, I'm still waiting for this final pullback, and I'm hoping that we're going to get a C leg at the 61.8 fib level, which will actually take us around this trend line region right there, or in between the 50 and 60 fib, which is a spike to this particular trend line right there. The reason I mentioned the 23.60 fib region, what I normally find with this level is this is a strong level of support or resistance depending on how you are trending. If we're on an uptrend, until we break above 9,103, I still foresee that we're going to be going further down. We could potentially look at doing a sell when we get back to this 9,100 level, and then we can sell down to our C leg, which would be our 7,800 level as well. That's what I foresee for the cryptos. And this move is literally being replicated between Bitcoin, Ethereum, and Ripple. So all you need to do is just look at one chart, and all the rest will play, because until we cross over that 10,000 on Bitcoin, all the other charts won't really move in a different way. They're all going to be moving in sync, to be fair. So if I look on this daily time frame, you can see moving average is ready to cross over, push, we're consolidating. We could again come back up to this trend, come back up to these moving averages, and then have further downside to our fib target right there. But for now, we're coming back up to hopefully retest this trend line, retest this 23.60 level on the fib. And then finally, what we're hoping for is once you've completed this particular trade and get in our C zone, then we can take price up, break 10,000, smash through 10,800 at our D1 target, and then get to the 12,000 region, which is our 61.8 level, which again takes us, which is our D2 target, which then takes us up to this double top level. Again, you can see our major resistance is highlighted right there. So that's how you technically analyze the cryptocurrencies. So overall, again, we are still bullish on the cryptos. Our trade is going to look something like that for round 2 for the next uptrend, which I'm hoping that we are going to get a new a new high low at this C leg right there before taking us for another high. Again, this is what it looks like on the daily time frame. Let's see how this week plays out. Thank you very much for your time, and hope you enjoyed this watch list. Feel free to obviously do a few things for us, guys. Make sure you're on the members zone. So go onto the members zone, use the password, watch the videos, read the PDF modules, and request a pair, read our blogs, and then also what you can do is you can obviously go in the members zone and then go in the members public chart analysis and share your ideas with the group as well. We want to see your technical analysis. We want to make everybody in the trading floor very independent. So let's have a great week this week. If you have any questions, please DM admin. Thank you very much for your time this evening.